What should I know about Veritasium?
It was under the blood moon. I felt my heart come. I held you in this strange light, a place where shadows.
So basically, I'm looking to tie the entire world through Veritasium. In 2014, I patented what I would call freedom, a new security model that allows individuals to do business with other individuals without having to worry about counterparty risk or credit risk. It's a new way of doing business, and I consider it to be phenomenal. What's called a foundational technology. A perfect example is, let's assume that I'm paying you $100 to do this interview in the professional system, okay? I'm gonna pay you the $100. So I'm gonna reach in my pocket, which is now a lot emptier than it used to be, okay? We're gonna take $100 out of this. I'm gonna pay you this $100, but it's gonna be indirect payment. So, you want $100 bill? Oop. Okay. Joop, just threw your $100 bill out the window. How comfortable are you with that? That you'll get that $100?
I mean, I hope I could send Alan out to go get it right now.
Okay. So,
Not
I literally threw your $100 bill out the window.
Yes.
Okay. Are you concerned about getting paid?
Yes.
Why?
Because my $100 is now in the street where someone else can grab it.
Okay. So my invention, you asked what I invented. My invention is the ability to do business with anybody. You don't have to know them, over any distance, in almost any location, without having to worry about what you're worrying about. You're going to get paid no matter where I put that $100, because only you can spend that $100. This is the invention, okay? I called it the unbreakable promise back in 2014. Now people call it DeFi, which I called it initially. I was the person that invented DeFi in 2013, sitting in a bedroom in Brooklyn. We patented it in 2014, and it is a phenomenal invention. Imagine the different businesses that can be done, different types of transactions that can be done when you don't have to worry about getting paid. You don't have to worry about your counterparty going bust. You don't have to worry about their credit. You don't have to worry about where they are, who they are, how they behave. I don't care that I put the $100 out using my invention, because you're guaranteed to get paid as long as you perform and we agree on that performance. Now, using traditional fiat currency, sovereign fiat currency, I threw that $100 piece of paper out, you're at risk for getting paid. So I suggest you hop downstairs and go grab your $100 if you want it. Now, do you see the difference between the traditional way of doing business and my invention? Okay. This invention, like I said, I consider to be foundational technology. As a definition, foundational technology is a technology that lays a foundation upon which entire industries are built. So examples of foundational technology going way back: the wheel, fire, or the discovery of fire and its use, electricity, the integrated circuit, the personal computer, the internet, decoding the human genome, the blockchain technology, particularly as used by Bitcoin, Ethereum, etc., and decentralized finance, which is a subset of the primary invention, which is peer-to-peer capital markets.
Explain what you mean by freedom.
Freedom. What I mean by freedom is the fact that I'm comfortable doing business with you. I can do business with you, and I don't have to worry about having a staff that vets you for your ability to pay. I don't have to worry about getting paid, just like I threw the $100 bill out the window. If it was done using my invention, we're both guaranteed to have what we agreed to have happen, or else you don't get paid and I don't get the service. Okay, that gives freedom. The value that is transferred is encapsulated in what we call capital, what I call capital. Okay, and normally, using traditional methods of exchange and barter, you always rely upon a third party to facilitate that. A bank, which aggregates savers and risk takers or spenders, an exchange, which aggregates buyers and sellers, a broker, which finds a buyer and a seller. We obviate all that, so you don't need an authoritative third party. No more brokers, no more exchangers, no more banks. Simply the buyer of a product and the seller of a product. They get together and they exchange. This is barter, like the type of transaction that was done back in the caveman days or the pre-bank days, where you raise cows, Messiah would go fishing, okay? You decide that you want fish, Messiah decides that he wants beef. You actually exchange fish for beef. The problem is, unless you work out a lot, it's very difficult to carry a bunch of cows to the market, okay, or the Messiah's house. So eventually they used proxy for the cows and for the fish, and that was currency. That currency was fiat currency because it only had value if you believed it had value. But when everybody believes it has value, you can now use that currency to replace carrying that cow or bringing the fish. Over time, right, when that currency is used and controlled by the government, it is devalued because the government uses the devaluation of that currency to run its economy. And when the economy is not as productive as it should be, right, instead of things falling apart, they devalue the currency to make up for the difference. Once you have that devaluation of currency, you no longer have the freedom to control your own financial well-being. Now, the government controls much of it. Okay, the intermediaries, such as the banks, the brokers, the exchangers, control the balance of it. And then you still have to worry about your risks, counterparty risk, credit risk, etc. I've, again, eliminated the counterparty risk. I've eliminated third parties. I've even eliminated the need to go through an intermediary to do business. So now you can do business directly with Messiah by trading the cows for the fish directly. So your own capital becomes the currency. Now I want to explain that in a little detail. Capital, by definition, well, think of the invention is software. Okay, it's a technological invention. It's software over a network. Okay, software transfers data. A good example is the internet. The internet transfers data, so when you email something to somebody else, right, you type letters into a document, you hit send, it sends bits and bytes, ones and zeros, across through the network to somebody else. That data, a subset of data, is value. And that value means something to you, right? Either economically, socially, etc. So that value is what we call capital. And there are three tiers of capital from a taxonomic perspective, hierarchy. You have the obvious capital, which is financial capital. Examples of financial capital: money, the currency, like what I just threw out the window, all right? Stocks, public equity, private equity, bonds, derivatives, options, etc. All examples of financial capital. You have social capital. Examples of social capital would be political capital that you would accrue from running for office over a period of time, getting a lot of influence over a certain amount of people. Human resources, friendships, alliances. A good example of social capital, of human capital, would be intellectual capital. And a subset of intellectual capital is intellectual property, patents, which is exactly what I've secured to secure this invention and protect this invention. And then the third set of capital is what you would call natural capital. These are things that occur naturally. Examples: commodities, oil, gas, wheat, soybeans, etc. Okay, forestry, ecological systems. These three major categories of capital are what we're able to move through the system. This is why I say the invention, which is peer-to-peer capital markets, is so much bigger than DeFi. When most people think of crypto, they think of anything that has to do with crypto. they automatically, jump to Wall Street, to trading, but this is much, much bigger than that. This basically allows you to transfer anything that is worth something to you or somebody else, which is value. Okay? If you look at the Forbes 400 list, or you look at the Forbes 100 list, look at how many traders are up there. If I'm not mistaken, it's 0. Look at the top 10, 0. True economic wealth over time never comes from trading things back and forth. It comes from maintaining something of value and holding on to it. See, and now we allow you to take value and transport it. So on to the next point is what makes the invention so monumental is you have capital. Let's say you have real capital on one side. Real capital would be an example of this building. Okay, this is a building, it's leased out. It looks like it has several commercial offices, maybe a little residential. This building throws off maybe $600,000-$700,000 a month in terms of rental income. Okay, the owner of this building says, I no longer want to be in the income producing property business. I want to buy a restaurant in Midtown Manhattan. We're in Dumbo, Brooklyn. Okay, he sells this building at $600,000 a month. Let's say he sells this building for $20 million. Okay, he takes $20 million. When he sells the building, he gets this, right? He gets sovereign fiat. This is paper, okay? But paper depreciates. There's a YouTube video series that I have called Masada, and it explains all this. Masada stands for money is a depreciating asset. Money is worth less and less almost every year because it is devalued by the governments, because that's how they run their business, which is what I discussed a little earlier. A lot of people from the working class believe that money equals wealth, and the more money you have, the wealthier you are. That's fallacy, and usually only people who are not wealthy think that. Very, very wealthy people have very, very little money. The reason is because money depreciates. So when you sell your building for $20 million, you get 20 million of these, or 20,000 $100 bills. I can't do the math, but you understand what I mean. You get a lot of these $100,000 bills, $100 bills, okay? The only reason you sell it to get these bills is to transport it from one capital asset to another capital asset. So he sells the building, he gets $20 million, he takes that $20 million and trots it to Midtown Manhattan, and then uses it to buy that restaurant in Midtown Manhattan for, let's say, another $20 million. So he's basically trading the value from his real property to the restaurant in Midtown Manhattan. What he doesn't do, he doesn't keep this, because this is just a transportation vehicle like a car. And just like a car, cars depreciate over time. So let's make an analogy. We have somebody who works at home, and they leave their house in the morning, drive their car to work, let's say in Midtown Manhattan, and they go to work. Okay, you only get in your car to go from work to home and home to work. You don't live in your car. Okay, and the reason you don't live in your car is because it's tight and it depreciates over time, while your home and the office building appreciate. But most people in the working class, and I define working class as anybody that needs to work for their money. If you have to get up in the morning, you need to work, you're part of the working class. If you don't need to work and your capital works for you, you're part of the capitalist class. They're being told that you should live in your car. So you don't live in your house, right? You don't have an apartment building, you live in your car. And if you live in your car, then the value of that car drops. Every day, every week, every month, every year, that car is worth less and less. So is this $100 bill. Over the last 2 years, since the beginning, right before the COVID lockdowns, if I'm not mistaken, the US government alone, so the Federal Reserve alone, has printed roughly 23 to 28% of the total money supply in the last year and a half to 2 years. That means that these dollars are worth 23 to 28% less than they were in 2019. You actually got that much poorer. Okay? But if you notice, risky assets are defined as assets that have some volatility in it. Those prices appear to be flying through the sky. The stock market reaches a record high several times a week, every week almost. Stocks are dramatically overpriced. A lot of those companies have diminishing margins, and they don't have strong earnings. So why is the stock market going up? Real estate. right? Real estate prices have been flying through the roof. Right before COVID hit, real estate was in the dumps, particularly high-end luxury real estate. Those prices are flying up. Commodities, flying up in price. Gas is getting more expensive, oil, etc. The answer to that is none of those things are actually increasing in value. They're priced in US dollars, and the US dollar is dropping in value. So when you price something in this, and it goes down in price, this looks like it goes higher. So that's the reality, and that's why nobody who wants to become wealthy should ever hold a lot of money. The more money you have, the poorer you'll be over time. That's an arithmetic fact, okay? Now, this invention allows you to transfer value from A to B, and you no longer have to go through this. You literally transfer one capital asset for another capital asset. Again, the transformational, foundational, absolutely wonderful, supercalifragilisticexpialidocious value that is the Middleton patent, 2014. So the freedom and sovereignty is achieved pretty much in the way that I explained just a minute or two ago. I think the more important part is to discuss zero trust, and then I think hopefully the freedom will be self-evident. So zero trust is a network security model. And basically, it works off of the paradigm of never trust, always verify. Network security, a computer network, traditionally has assumed that certain actors or certain members of the network are trustworthy. So you're a member of, let's say this is a co-op, a condo, a commercial condo. There's several offices here, there are 10 office buildings. You're on a network, a Wi-Fi network, and you have a password. They assume if you're in the building and you have a password, they assume that you should be trustworthy because the only way to get the password is from the administrator, and the Wi-Fi signal doesn't extend past the building. So with that assumption, they don't try and lock everything down, they just use a password. That's a faulty assumption. You can give that password to Joel could give that password to Janice, and Janice can give it to a friend outside. Someone could walk up in the hallway or sit right outside the window and do very malicious things to the network. And the reason why they can is because you trusted Joel, Janice, and whoever may be outside, even though you didn't trust them, they got access to it from the people you did trust. Zero trust means you trust nobody. So you assume anybody who can access the network can't be trusted. You also assume that anybody would be able to access the network, whether through malicious means or otherwise. And then you isolate each part of the network accordingly. So long story short, trust nobody, okay? In doing that, if one part of the network is compromised, the rest of the network is safe, okay? This is computer networking science. What I've done was I've taken the concept of zero trust and I applied it to value transfer. Basically, trust nobody. So because no individual party needs to be trusted for a transaction to happen, you can have transactions that don't require trust, which is why you can use our invention to do business with somebody in Sri Lanka or in Zimbabwe or Taipei or Tokyo or LA or Dominican Republic. Okay, I can't think of a city in DR right quick, but that's why I named the whole country. And you can do business with individuals over any arbitrary distance without having known where they are because you don't have to trust the individual. The ability to send value to anybody and exchange value in a business transaction or any other transaction or simply sending capital is freeing, because the only reason why most people spend a lot of time and effort, most of the friction and most of the cost of doing business is securing the trust portion. Most people don't want to get burned, they don't want to get misled, malfeasance, defrauded, etc. Moving the trust portion out of it means most contracts that are that big are reduced to a page and a half. Now it's about what you want and not trying to worry about how someone can get over on you. Okay, so taking the zero trust concept of network science, computer network science, and moving it to economic transactions or transactions of value is a monumental feat, in my opinion. And it makes things much, much easier to do. I can see new business models cropping up all over the world in different industries simply because they can. Just like when the internet became popularized, entirely new business models popped up. You know, when I was your age, young 20s, okay, because they don't know how old you are, right? When I wanted to see a movie, I would go to this place called Blockbuster, right? I would drive up there, I would pay them a fee, I'd get a VHS tape, I'd bring it home, I'd watch it, I'd bring it back, I'd pay an exorbitant fee, and then I'd pick another one. Okay, now this company called Netflix uses the internet, and they use it in a very interesting way, where you would go to their website, you'd find a movie that you want, you click it with a credit card, pay for the credit card, they would mail you a DVD to your house, so you don't have to go to the store. And then after you watched it, you mail it back, okay? And that was Netflix's business model. Netflix actually did damage to Blockbuster's business model, significant damage, okay, where they started reducing their sales, and Blockbuster was the preeminent video rental or video viewing vehicle outside of actually going to movies and watching TV. Netflix decided to take it one step further, and they say, why are we spending mailing fees and the cost of printing DVDs and shipping them out when we can actually deliver the entire process through the internet? So they use video streaming. A lot of hedge fund managers shorted Netflix, saying it would never work, the cost of streaming is too high, et cetera, et cetera. They had an old world way of looking at things. They couldn't see where a technology that eliminated frictions created an entire new industry. They just couldn't see it. Netflix now is the biggest media company in the world, if I'm not mistaken, by far, without a close second. Okay, that business model didn't exist 20 years earlier, literally, or 25 years earlier. The industry didn't exist, it was created. So going 5 years forward, 10 years forward, I could see new business models and new industries cropping forward that nobody ever saw. A good example, I was talking to a major car manufacturer a couple of weeks ago, and I was sharing an idea that I had using our invention where cars, which have their own wallets built in and their own private keys, electric cars or gas-powered cars can negotiate with each other, and one car can make a bid to all the cars in front of it to allow it through traffic. So it bids, say, $3 to let it pass. The car in front of it has a driver and they're not in much of a rush. I'll take the $3 to let him get past me, okay? And it can do this electronically at the speed of basically trading stocks or bonds. So for X price, let's say $80, you can go through the traffic, and instead of waiting in traffic for 40 minutes, you can zip by in 2 minutes, right? If the driver of that car is willing to bid enough, and if the drivers of the other cars are willing to accept the capital. This changes the way of doing business. You could do the same thing with airplanes, theoretically, helicopters. You could do the same thing with stores. So basically, you have everything is basically a transaction, okay? To the highest bidder or to the most strategic bidder. One example of several. So a lot of people would wonder or query or ponder, so what do you do with these patents? Well, I was issued a patent in Japan. I was granted it in October. It was issued in December 2020. Okay, it actually took me a year of analysis and research to see what the scope of the patent and the economic value is, and it's significant. And that's Japan, the world's third largest economy. I'm working on several others. One was actually allowed, but I'm not going to discuss it right now. Maybe not. By the time this video comes out, I will discuss it, but I'm not going to announce it now. And I'm working on several others. As for who may or may not be infringing on the patent, basically all the big names that you know, both in traditional finance and in new crypto finance. It is my opinion, that a lot of the activities of the big credit card companies, American Express, MasterCard, Visa, a lot of the big banks, JP Morgan, Goldman Sachs, Bank of America, car companies, industrials, basically everybody is either infringing on a patent or plan to come dangerously close. It's quite possible a lot of governments will. I'm not going to discuss how, but you can use your imagination. Federal governments, countries, county governments, cities, the patent is very, very encompassing because it was very, very early. The reason why it was written the way it was is because I came and looked at Bitcoin and the Bitcoin blockchain from a fundamental investor's perspective. I'm not a developer, I'm not an engineer, I'm an investor. So when I saw Bitcoin, the first thing that made me drop my jaw was, wow, programmable money, smart contracts. Everybody else looked at it and saw Bitcoin prices going up and down and making money that way. I've learned to play the long game. So I started in 2013 with this idea. We got the patents in roughly first, second quarter 2014. It is now 2021. We're ending 2021, going to 2022. So we're talking 8 years, and I'm starting to reap the value from it. A lot of investors, a lot of business people don't take the long game, and that's a mistake. You take the short game, and there's a lot of risk. It's very hard to make money reliably in a very short term. And even if you could, you have to compete with the entire crowd. Wall Street looks at earnings on a quarter-by-quarter basis, and you can't see anything of significance on a quarter-by-quarter basis. You look at things from a 5-year basis and a 10-year basis or a generational basis, then you have real clarity. Okay, so these patents are for my son's children and my daughter's children and their children's children. I look at things on a generational basis, one generation at a time. We'll assume a generation is roughly 25 years. Okay, so I am now reaping the value partially 8 years into the future. Okay, it's going to take me a good 3 or 4 years to solidify this. And then once the value is solidified, I'm going to create more intellectual property, more intellectual capital. And that's the dynasty that I'm building for not only for my family, but for anybody who, from a meritorious perspective, wants to overperform. My goal in this world is to make the best performers the leaders of the world. So those who are most astute politically and want to lift their environment or their world up the highest will be the political leaders with my assistance. Those who want to do the best for the rest of the world economically will do so with my invention, with my assistance, etc. And I want to move the world away from individual selfish pursuits of capital, financial capital, getting rich, or influential capital. You know, so this is dangerous, and this has put a target on my back more than once, and I've felt the pain more than once. But there's no reason in the world why that 9-year-old girl from Sri Lanka or that 7.5-year-old mathematical genius from Lagos or Abuja, Nigeria, or whatever genius from Haiti or any of the shithole countries, as our previous administration labeled them. There's no reason in the world why they cannot outtrade the prop desk trader on Goldman Sachs or JP Morgan. Okay, so I want the brightest minds and the hardest workers to succeed. You make a stronger country and a stronger world that way. And now we have the technology to do it.